In almost every financial crisis, gold is always mentioned. When markets become highly volatile, many people turn to gold as a safe haven. But is gold really necessary in a personal wealth portfolio? Does gold still matter in an era of stocks, real estate, and digital assets? And if it does, how much gold should you actually hold? Finally, does gold generate income? In this video, we will walk through these questions step by step. No promotion, no buy or sell recommendations, just a personal perspective on the role of gold in long-term wealth management. First, it's important to understand that gold is not designed to make you rich quickly. Gold is not meant to replace business ownership or growth investments. The primary role of gold is to preserve purchasing power. Throughout history, many currencies have lost value or disappeared entirely. Gold, however, has remained globally recognized. When inflation rises, cash steadily loses its buying power. Other assets may grow, but often with higher risk. Gold is generally viewed as a defensive asset. It may not rise aggressively, but it also tends to avoid sharp collapses over short periods of time. When stock markets experience major declines, investor psychology usually shifts into defense mode. During these periods, gold often receives more attention, not because gold guarantees strong returns, but because it helps reduce overall portfolio risk. Gold does not depend on corporate profits. It does not rely on the performance of any single company, and it is not tied to a government's ability to repay debt. This is why central banks continue to hold gold, not for speculation, but for stability and confidence. Stocks are effective for long-term growth, but they come with significant volatility. Real estate can generate income, but it often lacks liquidity and requires large capital. Cash is flexible and liquid, but highly vulnerable to inflation. Gold does not dominate in any single category. Instead, it balances the weaknesses of other assets. That is why gold typically represents only a portion of a portfolio. There is no universal perfect percentage. Everyone has different goals and risk tolerance. For those who prioritize capital preservation, a higher allocation to gold may make sense. For younger individuals with stable income and higher risk tolerance, a lower allocation be sufficient. Many long-term allocation frameworks suggest 10 to 20% of total assets, a reference range. This is not a rule, but rather a general guideline. What matters most is not the exact percentage, but whether gold exists in your portfolio at all. A portfolio without gold is fully dependent on fiat currency and financial markets. During stable periods, this may seem fine, but when risk events occur, the absence of gold can amplify volatility. Gold does not produce recurring cash flow. Gold does not pay interest. It does not distribute dividends, and it does not generate monthly income. This is the most obvious drawback of gold, but it is important to understand its purpose. Gold is not designed to create income. Gold is designed to store value because gold cannot go bankrupt. It does not depend on business performance. It is not affected by dividend cuts, and it does not lose value due to poor management decisions. Gold exists independently of the financial system. This is why gold is typically held for the long term, not for short-term speculation, and not for quick profits. Gold does not replace stocks. Gold does not replace real estate. Gold does not replace entrepreneurship. Gold serves as a layer of protection. Holding a portion of your wealth in gold can stabilize a portfolio. It can reduce emotional stress during market volatility and help investors remain patient over the long term. This is my personal perspective. This content is not financial or investment advice. Each individual should build a strategy aligned with their own goals. Thank you for taking the time to watch this video. I hope it helped clarify the role of gold in long-term wealth preservation. If you found this content helpful, please consider liking the video to support the channel and subscribe so you don't miss future updates. This channel focuses on a neutral perspective on gold, personal wealth management, and building resilient portfolios over time. Your subscription helps support the channel and future content. Once again, thank you for watching, and I'll see you in the next video.